The way it really works is you take money and credit away from people, right? And something else costs them, so they spend less. And because they spend less, then you have less inflation. Yeah. All of them have been painful, and we produced a whole lot of debt. And so now even the Federal Reserve is going to start selling 1.1 trillion. And then you have the Treasury selling $1 trillion. And so there's a lot of selling, and what that does is it takes private credit. How bad does it get?
At the expense of private use,
you lose
right?
You know, the way the system works really is when you get a little bit of, you get weakness, you get a shot of credit, and it's like a shot of an upper. And so that gives you buying power. And it shouldn't be surprising that when you buy a lot more, that right. inflation goes up. And then
did you
have to pay
expect to go
back.
Up to this degree? Because actually you did.
I expected it to go up about where it is.
Right.
But then we also had other things. You know, we had the Ukraine, and we had something. There's nothing precise, but I expected it, yeah, to go up quite a lot. Because inflation is due to the total amount of money spent divided by the quantity of goods sold. Nothing more than that. So when there's the giving buying power and you spend a lot, you know, we've increased the money supply, and by any of the measures, enormous amounts. So, yeah.
Can we get a soft landing doing what we're doing right now?
You're going to,
markets kind of hope against all odds that we can, and we avoid a recession. What do you think?
You can't keep spending without and bring down inflation. So here's what I think. I think that we're not going to be able to bring an interest rate to a high enough level to give a good real return to holders of credit without causing a contraction in economic activity.
Worse than what we're experiencing.
Right. You had an 8% inflation rate. Look at what people get, and we're talking now about a 3% interest rate, and people think that that's good.
Right.
So you're going to lose money, lose buying power. I think the inflation will come down a bit, but it's going to be very high. And money's going to get a lot tighter. So you're going to have a stagflation, right?
Like we had in the 70s, worse? What do you think?
These things, similar to the 70s, but none of them are all the same. There's always a paradigm shift. The way a paradigm shift is, it's like there's a 10-year period. And almost every 10-year period is the opposite of the 10 years before. The 70s produced the 80s.
Yeah, I was amazed to see that. It bears out, doesn't it? Yeah.
And well, the reason is, at the end of a period of time, everybody believes that the future will be like the last 10 years.
Right.
And everybody's positioned that way. So when you look at the environment that we had over the last 10 years, not inflation, no low interest rates, availability of credit. So these moves take place typically over a period of 10 years, and there, let's say, two legs to the move. So you have a change in mindset. People thinking what is safe. Used to think that cash was safe, a safe investment. But cash it loses buying power to inflation. So now, as people realize that loses buying power, and as the Fed has to deal with the tightening of monetary policy, you get the first leg. And that's the first leg that we're in. And when that runs its course, which it probably would run its course, I would say, in the next 18 months or so, then you have
18 more months of tightening?
Yes. I mean, 18 more months of, and by the way, there's nothing precise, and I'm not sure that I'm right in this, right? I'm just saying, I'm giving you what I think.
Right.
That if you take the cycle, you have to raise interest rates high enough that it produces an adequate return. Otherwise, the sellers, they're going to sell their instruments. And that if we look at the supply demand for credit, the Federal Reserve is going to sell 1.1 trillion. You have the government sell trillion, and you have others selling because it doesn't provide a good return. That creates a certain tightness of money. That creates a fall in the contraction. You have a contraction in spending power, credit. And so that's what's likely ahead. So you have the first leg of the move. Like all classic first
This is just the first leg.
Well, these things take place until the opposite is true, until people believe that cash, it won't be a good investment, until there's the inflation. So I think that you have the leg, like 1971 into 72 and then 3, tightness of money policy causes 1974-5, bad recession, bear market, easing of monetary policy. Then you get another leg up, 76, 77. Then you have the higher level of inflation. Then you have the tight money policy. And at that point, everybody believes that I never want to own a bond. I only want inflation hedge assets because that's how they're positioned. And then the opposite happens in the 80s. So it's that kind of a situation. And that's happening in a political environment. Because we're talking about markets, but we can't separate markets from politics. And we can't separate politics internally from external politics. So we also have the political situation in terms of the left and the right and the extremity of that and what that might mean in terms of policy.
So does it matter, though, who's in charge in that environment?
Of course it matters who's in charge. Of course, there's the fight over wealth and power. And it's an irreconcilable difference politically. We have populism. And populism, a populist is a person who will fight for that one side and won't lose. They won't compromise.
Donald Trump.
Donald Trump, or it could be the opposite. But the ability...
I don't think Joe Biden's a populist.
Well, no, but I think that there are also populists of the left.
Got it.
And there are populists of the right, right? And neither of them, they have irreconcilable differences, and they won't lose.
And that's why you get anything done.
That's why you even have situations. The question is, in the next election, will either side accept losing? And think about it as Americans asking, will both sides accept losing? Will we respect the system? And so it makes an inefficiency in the economy. Then we take other things, not just the printing of money, but we're spending without a limitation. Normally, if there was not a fiat monetary system, or you as an individual, you ask how much money do you have to spend? But now we think we have spending on defense, spending on rebuilding the Ukraine, spending on this program, spending on that program. There's not a limitation. These things are connected. So yes, leadership and the efficiencies matter in terms of the economy, and they matter in terms of our lifestyle, because we have these internal conflicts and external conflicts in which there's worries about self-sufficiency in case of a war. In other words, we think about trade. All of those enter into the picture. So you have a dynamic that is very similar, really, to the 1930s dynamic, or even before the 1930s.
Well, the 1930s dynamic got us ready for Germany, and a lot of people are saying now we have to get ready for China. You think cooler heads, and hope in the end of your book you talk about cooler heads possibly prevailing. You talk about the Taiwan issue, and you say that Taiwan is a one-of-a-kind interest that China would fight for because of its belief that there is but one China and Taiwan is part of China. It's doubtful, you say, that the U.S. would consider it worth a major fight to defend, though it might. This seems to me to be the only possible trigger for a military war between the two greatest powers in the next 10 years. So you had to do an under and over on that. What would you say?
Well, I would say 30% of a military conflict. I think both sides recognize how terrible a military conflict would be. But you could take something like Nancy Pelosi's trip.
I was just thinking.
Okay.
Would that trigger it?
The fact that we're simply talking about it, that we're so close to the edge. It's not the old days. The old days
But it
were,
doesn't take much, right?
the United States used to be a dominant military power. Think about it. The New World Order began in 1945. The United States won the war. We had 80% of the world's money. Gold was money then. We were half the world's GDP, and we're a military power. So nobody wanted to fight. If you look at the history of these things over a period of time, when you have then comparable powers, and there's disagreements, it can be resolved quite often by a conflict. And so that's the nature. We're no longer the dominant power. So it becomes closer. So now when we deal with existential issues for different parties, there is a risk of these things. And
it's supposedly in both our economic interests to avoid that.
Of course.
Wars are always avoidable,
No, of
but you're
course.
right, it gets to the next level.
Like if China became Russia, think about the economic consequences of how we're intertwined. 22% of American manufactured goods imports come from China. So just imagine China became like Russia. In other words, you say, I don't want to take imports. So people don't buy their Nikes. They don't buy their Apples. They don't buy things that are produced in China and so on. Do you know what that would mean economically for us in terms of the inflation rate and the consequences because of how they're intertwined?
Well, the argument would be it hurts China more, we say. But you say, no, it's mutual destruction, right?
Who cares if it hurts China more?
Yeah.
Right? Is that a win? When it hurts you terribly? Okay, so when you have a war, both sides lose. I'm just trying to be practical here. If we're looking at this, you asked the question, where are we? We are at a risky position, right? We understand this. What would the consequences be? I'm describing the consequences mechanistically. I'm not ideological.
No, I know. And
I'm a practical guy.
What I love about the book, right, is you go through history where powers come and go. You mentioned, among others, China, England, and Spain, Russia, us. But it all goes in waves. Where are we in this wave right now?
Well, there's an arc.
Yeah.
The way it works is there's a new order. And a new order comes out of a conflict, and so one side wins. So the last world order began in 1945. Then there's the dominant power, economically and so on. And then as they become the dominant power, you have a period of peace and prosperity because nobody wants to fight it. People work together. It's a great equalizer also. Wealth gaps are left. People come back and they're produced, that generation. Then what happens over a period of time is things get better. You change the generations, you change the approaches, and then you build up larger wealth gaps, larger, wealth is something in our system that is not distributed equally, or you build up resentments or values gaps.
Are we at that pressure point?
We certainly are. That's not a controversial statement.
Right.